Warrants and covered warrants, exploring financial instruments and their strategies. Agenda items: Introduction to warrants, mechanics of warrants, introduction to covered warrants, market applications and strategies, regulations and market trends. Definition and key features. What are warrants? Warrants are financial instruments issued by companies providing the holder the right to buy shares at a specified price. Key features of warrants. Important features of warrants include exercise price, expiration date, and the underlying security influencing their market value. Investment potential. Warrants can offer high returns and flexibility, making them an attractive option for investors seeking growth opportunities. Types of warrants. Call warrants. Call warrants enable investors to purchase the underlying asset at a specific price, providing potential for profit if the asset's value increases. Put warrants. Put warrants allow investors to sell the underlying asset, protecting against potential price declines and providing a hedge for investment strategies. Investment implications. Understanding the distinct implications of call and put warrants is crucial for developing effective investment strategies tailored to market conditions. Comparison with options. Issuance differences. Warrants are issued by the company itself, whereas options are standardized contracts available on exchanges. Expiration terms. Warrants generally have longer expiration periods compared to options, impacting their value and trading strategies. Underlying assets. Both instruments can be linked to various underlying assets, but the choice may differ based on the issuer and market conditions. How warrants are issued. Purpose of warrants. Warrants are issued by companies primarily to raise capital, offering potential investors added incentive to invest. Attachments to securities. Warrants can be attached to bonds or preferred stock, enhancing their appeal to investors, providing potential upside. Investor incentives. By offering warrants, companies provide an incentive for investors to purchase the underlying security, potentially increasing investment. Exercise price and expiration date. Understanding exercise price. The exercise price is crucial in determining when a holder can buy the underlying security, impacting investment decisions. Importance of expiration date. The expiration date is vital as it marks the decline for exercising the warrant, affecting overall investment strategy. Timing in investments. Timing is essential in warrant investments, as both the exercise price and expiration date influence potential gains. Valuation methods for warrants. Complex valuation process. Valuation warrants often involves complex calculations and models that can resemble those used for options. Influencing factors. Key factors influencing the value of warrants include underlying asset price, exercise price, and expiration time. Black-Scholes model. The Black-Scholes model is one of the primary methods used for valuing warrants and options in finance. Definition of covered warrants. Investors' rights. Covered warrants grant investors the right to buy or sell an underlying asset, offering flexibility in trading. Backing by assets. These warrants are backed by actual assets held by the issuer, providing investors with additional security. Security compared to standard warrants. Covered warrants provide enhanced security compared to standard warrants, reducing investment risk for holders. Differences between warrants and covered warrants. Issuer differences. Standard warrants are issued by companies, while covered warrants are issued by financial institutions. Liquidity aspects. Covered warrants generally offer better liquidity compared to standard warrants, making them easier to trade. Risk comparison. Covered warrants typically present lower risks than standard warrants, providing investors with more security. Advantages and risks of covered warrants. Benefits of covered warrants. Covered warrants provide advantages like lower trading costs, simplicity in transactions, and profit opportunities under various market conditions. Market volatility risks. Investing in covered warrants involves risks, particularly due to market volatility, which can significantly affect returns. Underlying asset performance. The success of covered warrants heavily relies on the performance of the underlying asset, which can introduce uncertainty. Investment strategies using warrants. Leveraged exposure. Warrants provide investors with leveraged exposure to the underlying assets, amplifying potential returns on investment. Speculative play. Investors can buy warrants as a speculative play, aiming for high returns based on market movements. Portfolio enhancement. Using warrants can enhance portfolio returns while effectively managing investment risk through diversification. Hedging strategies with covered warrants. Purpose of covered warrants. Covered warrants serve as a financial instrument to hedge against risks associated with price fluctuations in the underlying asset. Mitigating losses. Using covered warrants can help mitigate potential losses in a volatile market by providing an offsetting position. Volatility management. Covered warrants can be an effective tool for managing volatility in the markets, allowing for strategic adjustments. Regulatory environment. Regulatory framework. Warrants and covered warrants are governed by regulations that define their issuance and trading processes. Impact on issuance. Understanding regulations is crucial as they directly affect the issuance of warrants, influencing market dynamics. Compliance importance. Familiarizing oneself with regulations ensures compliance, which is essential for strategic planning and risk management. Current market trends and innovations. Evolving market landscape. The market for warrants and covered warrants is constantly evolving with innovative products that cater to investor needs. Capitalizing on opportunities. By staying informed about current market trends, investors can better capitalize on emerging opportunities and maximize returns. Navigating market challenges. Awareness of market trends helps investors navigate potential challenges while making informed investment decisions. Future outlook for warrants and covered warrants. Promising growth potential. The market for warrants and covered warrants is expected to grow as more investors become interested in these financial instruments. Increasing investor interest. With the rise of personalized investment strategies, more investors are exploring warrants and covered warrants for diversification. Market expansion factors. Various market expansion factors, including regulatory changes and technological advancements, may influence the future of warrants. Conclusion. Versatile financial instruments. Warrants and covered warrants are flexible financial tools that can be customized for various investment strategies. Advantages and challenges. These instruments come with unique benefits like leverage and challenges, such as complexity and risk management issues. Informed decision making. Understanding the mechanics and regulatory aspect enables investors to make well-informed decisions when utilizing these financial tools. Thank you.